everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big six markets, the Bund, Euro, Gold, the bonds, crude oil, and the S&P 500, and formulate an attack method for tomorrow's trading with the information that the market is giving to us now. The main objective really is just to be as prepared as possible for tomorrow's price action, and again, that is pending on whatever the market is giving us right now. Things can change quite a bit with all this news that's going on. But before we jump into the charts and get into all the fun stuff here, make sure to swing on over to Slingshot Futures, scroll down, and click on the Join the Daily Outlook newsletter, and that's going to add you to our email list so that you know every single time one of these videos comes out. You never miss a beat. We also talk about different statistics, different stocks, all kinds of different things to keep your eyes on. Great newsletter to be a part of. At the bottom of the page, also, every single morning and every day, in the blog post section, we talk about the market psychology, where we take one market, rip it apart, and try to figure out as much as we can about it so we can become more and more proficient as we read psychology going into the next day. And of course, our live trader morning prep levels are always posted at the bottom of the page in the morning. If you haven't done so already, make sure to go to the live trader subscription and trial info and sign up for a trial. Take a one-day trial and see what we're all about. If you like it, you can always subscribe. And of course, VIP membership comes with the live trade room package, all part and parcel together, so you don't have to worry about paying a thing ever again. Now, starting off with the Bund here, we have some pretty good movement, but in typical Bund fashion, we really didn't go a whole lot of anywhere. Lots of up and down, and a good range, but we kind of ended flat where we opened. We opened up at 163.28, and we closed down here a little bit further down at 163.22. So, on a daily chart, not much really happened today, right? The daily candle is going to look like this, and a wick on the top, and a big old wick on the bottom. So arguably the buyers will like it more than the sellers, but all things considered, they didn't really accomplish a whole lot, which means that we are likely in a range. We started off the day with a gap higher, turned down, nice movement to the downside, found a fake break, and then turned into a head and shoulders reversal right back towards the upside, where we are now grinding higher in this wedge. The one big level that we're kind of dealing with is the prior high of day. That's at 163.30, and we have a ton of resistance coming in at 163.28. So there's a lot of fighting going on up at these highs. Now, if we can open tomorrow with a gap higher, maybe above these levels or back down again, may have a little bit of emphasis on one side or the other. But at the moment, because of the range-bound sentiment, we're pretty high in the range. I would rather look to sell up here to try to drive the market down, to then look to buy at the first area of interest, 163.11 down to 08, and if they can really push down, I would love to see a reaction around 162.93. Now, let's say tomorrow morning we open up and we gap above that 163.28 area, we gap above the wedge, etc. That could lead into a run or a rally back up towards a new high, maybe tap that 163.40 area, and then start turning down from there. So it really is a big dependency on where we open versus what we're going to want to do here. But at the moment, if we open up right where we closed, I'd be looking to sell for a drive down, then buy on the drop lower to reverse it back up again. Over on the Euro, big old rally to the upside, starting off at around a little after 3 o'clock, and it didn't really stop until we had that huge burst at 11, and then it sort of fell apart. Now, I say fell apart, it didn't fall apart in the sense of completely reversing like we've seen on a couple of the other markets today, but it did catch a big pullback. Now, we do talk about this from time to time, where we have this big rally higher, we get a little congestion in here, we pop and then pop, you get this type of exhaustive movement where the buyers are going to look at it and think, oh man, the market may be giving me a gift here, I better exit some of my long positions, and that causes a pullback, or sometimes a full-blown reversal off of the top. In this type of situation, buyers definitely still are interested, but they're not interested at the highs anymore. Nobody wants to buy that far up after missing all of this. They would much rather buy in the little pullback, or a little trap low, or a twin reversal, or just something on a pullback. So far, this pullback has been very aggressive. We had a lot of back-to-back bear candles, a small little two-candle bounce, and then more consecutive bearishness. A bear spike in channel that broke lower, right? So there's a lot of bearishness in this move right now. You don't want to be the first one to the party to the upside, is basically what we're saying. Now, this area around 63.89 is a huge area of support, and if they can dip down 63.46, but this block zone in here is a massive buying level for buyers to be looking to jump in on the bigger picture, holding overnight, holding for a couple days, etc., looking back for a rally towards the highs up around that 6,700 mark. But, right, those are longer term traders. For faster term traders, we're looking for a little bit more of a simplistic way to get in that is more, feasible for that day of movement. And so far, the sellers still own the market. The buyers can't get above the moving average. They're trying, right? They're getting a little bit of a pop higher. They're dealing with the prior high of day right now. If we can start getting some rallying in this, if we can get a pop higher, show that the buyers really mean it, get a pullback and then buy into it, that would be where us shorter term traders are going to be looking to get in. Longer term traders and overnight traders, or maybe if you trade Forex, this is the option for a possible long going into the overnight session and into tomorrow. But for shorter term, we need a little bit more information before we go jumping in on the euro. The buyers still own it in the long term, but the sellers aren't letting it go quite yet. We need to wait for them to get out of the way. Over on gold, if you thought the rally on the euro was strong, gold makes it look like it was nothing. A big old rally to the upside here on gold. We have an ascending wedge to finish off the day, and we have a huge spike, possible exhaustion, big pullback, and a return back to the highs. Now that return back to the highs, they tried breaking out of it, failed, tried breaking out of it again, failed. We're getting a lot of failure up here. So that is telling us that we're more likely at this point to transition into a range. We're no longer looking for that strong bullish breakout momentum that we had back here, because it's obviously not here anymore, right? If that were the case, this would have broken out for another 60 points to the upside, but it didn't. They got stuck at the highs and failed, and now we're getting a little bit of a correction down. We are coming into the bottom of a possible wedge, 2 different levels to keep your eyes on. We also have last week's high floating around at 73.3 that are potential areas of interest. Given how strong this is, sometimes what you end up getting with this type of market is in the overnight session, it just doesn't stop. It keeps grinding, going a little bit sideways, grinding to new highs like this, or the one that I would be hoping for, at least, I don't know if we're going to get it, but hoping for, a pullback, right? I want to buy on a nice pullback. I don't want to buy way up here. It's way too expensive up there. I want to buy down at 71.4 to 70.1, maybe aggressively at that 73.3 mark. Just kind of depends on what the market's doing at that point in time. But again, when you have this kind of rally, one of 2 situations usually happens overnight. Either it grinds and just keeps going and going and going, and you open up the next morning, 8 o'clock, 15 points higher, or you get that pullback and then they return back to the highs again. Either way, we're looking to be buyers, but preferably at a little bit of a better price for me, unless you're a little aggressive. Over on the bonds, pretty good rally to the upside considering we're talking about the bonds here. Nice little bump higher from the low point all the way to the highs. It had a rally of over a full point. It was a point and 9 ticks. So, I mean, overall, definitely not bad at all. 41 tick rally to the upside for the bonds is no joke, and they're showing that the buyers have a good amount of sentiment here. A little bit of a problem, though. When it came time to return back to those highs, they failed, right? Where did the buyers go? Why aren't they able to continue this upward momentum? We're running into a little bit of trouble up here. We're forming a little bit of a wedge top. We do have a very aggressive wedge bottom coming into play, and a lot of times when they're that steep, what the market will do is come back to them and grind around them and just kind of follow them up towards the highs where they then start pulling back. So right now what I'm looking for is one of 2 things. Either we come down to the bottom of that channel looking to buy and grind our way back up towards the top, or the next option would be for the market to come down, grind a little bit, and then break down into major support, where we then find all of the other buyers willing to jump back in to shove the market right back up to a new high. Now, obviously, you know me, I would prefer this one because I would like to get a better price. But sometimes when you have this strong of a move, it doesn't really care, right? The market doesn't care what you want. We got to figure out what it wants. And right now, it looks pretty bullish. So if we can get a nice little pullback, we may be able to find some grinding off the bottom edge there. Either way, still looking to be a buyer, but just kind of depends on what the market wants to give us in terms of entry. On crude oil, range bound again, right? Yesterday had a pretty range bound but bullish movement to the upside. Lots of kind of trendy ranges yesterday. And now today it was even worse, right? Now we didn't really even have much of a trend. It just went flat range bound and we just got stuck. So this overall back and forth that we have a move up to a new high, a retest of those highs, and then a break down to a new low. They try to get back up to a new high and they fail. And that area puts in a big area of interest between 53.19 and 16 because obviously the sellers were strong enough to hold it there given that drop lower. They hit a new low. They try to come back again. They can't even make it back to the same area and they push down to a new low again. Once they finally made that low, then they get the rally to the upside, and we break firmly above that major area of resistance, which now turns into support. And you can see the aggression of support that came in there, even on a secondary test. Now we're starting to get a little bit of a megaphone here with a higher high and a lower low working its way forward. We're just cycling off of the lows, and now API did just come out, so that may throw a little bit of a spanner in the works, but overall, still looking for continuation to the upside. We have huge buy-side objectives up at 53.53, and that is going to be the overnight objective for buyers to push into if they're able to keep this API movement going. That is a huge target for the buyers, and you're likely going to find a lot of profit taking there. If we don't get that rally continuation to the upside, I would be looking for a pullback down to the lows, especially if we can get price into that kill zone here, not only with support between 19 and 16, but also the bottom of the megaphone and the bottom of rising support all coming into the same place. You could find a nice little ping off of that back towards the highs, but given the API response so far, probably going to be able to finish that objective in the overnight session. And then finally, the S&P grinding higher and just, and I mean just, like in the last 5 minutes, finishing off that upside objective at 23.51 and a quarter. That was the huge upside objective from this rally off of the lows, and they finally made it up there at the end of the day. Now, on this rally higher, we are forming a little bit of a wedge. We're having some difficulty up here, and it's not much of a surprise. The last time the market was up here, it was a big range, so is it really any surprise to see them kind of bouncing around the same area again? Yeah, not really, especially now that they've got that major objective filled. We could find ourselves right back in that earlier range and just bouncing around here once again between that 48 and 53 area where we just get stuck for tomorrow's price action. We had that big breakdown, but they took it all back at the end of the day, and it's another situation where they opened up and are closing pretty much right where they opened, if not a little bit bullish, which you wouldn't think so looking at this, but we opened up here, and we had a drop lower, and this is the midnight open, obviously, into a new low, and that's going to be a monster wick on a daily candle, and that's going to have a lot of buyers pretty interested. So overall, buy side still owns it. I would love to see a pullback. We may not get it, but a pullback down in towards that 43 3/4 down to 42 1/4 area would be phenomenal for possible buying pressure to drive the market back up, or at the very least, rising support coming inside here, and that may just form a little bit of a wedge where we get pinched between the target area as well. So overall, want to be a buyer, but not way up here, need a pullback. That's going to do it for the overview on the markets. Now, looking at tomorrow, we do have a decent amount of news. Finally, right? Today, we had a lot of news in the early morning session and some news at 10 o'clock. That's really about it, though. Tomorrow, we have a bunch of news scattered throughout the entirety of the day. Tomorrow morning at 4:30, we have out of the UK, the average earnings index, the Bank of England Governor Carney speaking, and the climate count change all coming out at 4:30. And those are all big announcements for the UK. Then we go into the US session, 10 o'clock, we have the Bank of Canada Monetary Policy Report and the Bank of Canada Interest Rate Decision, both very big numbers for the Canadian dollar or any pairs related to it. You may even see a little bit of a response on crude oil, if it weren't for the next one, which of course is 1030 crude oil inventories. The inventories, they kind of do what they want, right? They sort of, whatever news comes out, it might have a little bit of an impact, but the inventories, that's what everybody's going to be watching. The inventories for tomorrow, so everyone's on the same page, the forecast is 0.087 million. The previous was 1.566. The API report will have the numbers in a little bit here, and we'll know kind of about what we're expecting to see. Then tomorrow going on at 11:15, back in Canada again, we have the Bank of Canada Governor Paulo speaks. And then at 21:30 Eastern Time from the Australian side of things, we have the employment change coming out for them tomorrow night. So a lot of news going on tomorrow and pretty scattered throughout the day. Fingers crossed that keeps things going for a little while. That's going to do it for this one. Like we always say, make a plan, trade the plan, follow those rules, and we'll see everyone next time.